Are we about to see a huge recession in 2025? We have many signs that have always pointed to a looming recession, signs that we cannot ignore. What is a recession? Well, it's definitely not good. It's a widespread and prolonged downturn in economic activity. So, how can we tell that a recession is coming? Well, every recession followed a peak in the federal funds interest rates. And if we look at the S&P 500, we can clearly see that the interest rates have topped out as they did during every other recession before them. We can see that during 2000 recession, right before the 2000 recession, that the federal fund rates peaked out. And we can see here in '07, right before that Great Recession, that the federal funds rate also topped out and began to reverse. Now, everyone knows that the yield curve uninversion is also an indicator of a looming recession. As we can see right here at the bottom, we can see that we had the yield curve uninversion here and here, which coincided perfectly with the rates beginning to be dropping. We can see both of these indicators together pointed to that downturn in this market, huge crashes. Here we are in 2024, 2025, and in 2024 we had the same signs pop up. The rates were paused and began to drop. At the same time, we've seen the yield curve uninvert after the longest period of inversion in history. Now, in addition to that, we can see here that recession also was preceded by the ISM manufacturing index, and you can see the contraction there. And we can see clearly right here that we are below 50 here now and have been for a while. And then if we overlay that on the chart, we can also see a huge drop in that index from all the way back in 21 even. And if we go back in time and look at these other recessions, we can see that the same thing happened leading up, and it was an early sign that it was coming. And we've seen the decline in the ISM index preceding each of these recessions. This one going way back there and a huge drop. This one here, we can see right here topped out and had a huge move down leading into that. These are all way too coincidental to ignore and just pretend that they're not there. And the last and final thing, if we take a look at our indicator here on Market Cipher B, we can see that in the past, all the other times that these recessions came on, you've seen a huge divergence leading up into that time period. Well, here we are again, and while things do look bullish here, we are seeing some warning signs on the chart outside of the federal fund rate and yield curve uninversion. You can see here that even though the market put in a slightly higher high, you can clearly see that this indicator put in a lower low, and that's a bearish divergence. You can see it much more clearly on the daily time frame. You can see that the market put a slightly higher high in on price, and then down here you can see that the indicator showed huge bearish divergence. These are all extremely frightening warning signs that we may be headed for a very huge bear market in all assets, especially crypto. Crypto is one of the riskiest assets there are, and Bitcoin is no different. And if we take a look at Bitcoin and we can look at the potential to where we can expect Bitcoin to come in a prolonged recession, aka bear market. And if we draw our primary trend line from all the way back here, or actually just to go right here and pull it up through here, we'll see that it wouldn't be out of the ordinary for Bitcoin to come back test this primary trend line. And if things got really ugly, we could even see something like this, because that's even your main primary trend line right here, which would actually be a perfect back test of these areas of support that we previously had. So these are just things to consider as we enter into this period. And the worst thing you can do is be risk on. So one other thing to look at for where Bitcoin could find its bottom during this bear market is that previously all other bear markets found their bottom from the previous lows to the new all-time high it created. The bottom always came in right around between the golden pocket, which is the 618, and the 786. We can clearly see that from this bear market low as well as this one here. So if we did the same measurement and pulled from the $15,000 bear market low up to where we currently are now, and it could go a little higher, but look where that golden pocket comes in at beautifully, right here in the same spot. Isn't that ironic? So I'm seeing some major top signals form in those recession indicators, and I am proceeding with caution, and I advise you to do the same. Of course, this is not financial advice, and you should do your own research.